Hey everyone, welcome back to Corporate Decoder, the place where we peel back the layers of corporate speak to find the real story. Today we're diving into a filing from Sigyn Therapeutics Incorporated, and let's just say it has got some interesting notes about how they're fueling their operations. Before we jump in, if you like getting these clear, no. Fluff breakdowns of important company news, make sure you are subscribed. And don't forget to join our growing community on Discord, linked in the description below. Alright, so Sigyn Therapeutics Incorporated is here with a current report. And the earliest event they're reporting goes back to the 6th of February of 2026. This filing essentially tells us about some new agreements they've entered into. Let's get right to the interesting part. On the 12th of February of 2026, Sigyn Therapeutics made a deal with a company called Brio Capital Master Fund. They took out what is called a convertible note. Think of it like a short-term loan, but with a twist, the principal amount was a little over $22,000. But the company actually received about $20,000. That difference might seem small, but it is a clue that there were fees or discounts involved. Now, here is where it gets really interesting. This note comes with an 8% interest rate, which is pretty standard. But the real kicker is that Brio Capital has the option to convert this loan into Sigyn Therapeutics stock, and they get to do it at a really sweet deal for them. They can convert it at a price that is 35% lower than the lowest stock price the company traded at in the 20 days before they decide to convert. This means if Sigyn's stock price drops, Brio Capital can get even more shares for their money, effectively diluting the ownership of existing shareholders. This isn't a one-off deal. A few days earlier, on the 6th of February, Sigyn Therapeutics also made a similar agreement with Lambda Venture Partners. This time, the principal amount was a bit higher, around $27,700, and they received about $21,500. Again, we see that difference between the principal and the actual cash received, and in this case, they explicitly mentioned legal fees were part of that reduction. It shows that these financing deals aren't free money, there are costs associated with them. And just like the previous deal, this note is also convertible into company stock at a 35% discount. The filing mentions that these deals are exempt from normal registration rules because the investors are considered sophisticated, meaning they're assumed to be knowledgeable about investments and the company's business. This is a common way for smaller companies to raise capital quickly. It basically means they're selling directly to a select group who understand the risks involved. This leads us directly into the unregistered sale of securities. Essentially, the company is admitting they've sold these convertible notes without going through the full public registration process. This is allowed under certain conditions, as we just discussed, but it highlights that they're relying on private placements to fund their operations. The actual legal documents detailing these agreements are being filed as exhibits. These are the backbone of the transactions, laying out all the fine print, and the report is signed off by James A. Joyce, the chairman and CEO, on the 20th of February 2026. This confirms that the company acknowledges these agreements and their reporting obligations. So, what does all this mean for Sigyn Therapeutics? They're clearly in a phase where they need capital to operate, and they're using convertible notes as a primary way to get it. The big story here is not just that they're raising money, but how they're raising it. Convertible notes with significant discounts can be a double-edged sword. On one hand, they provide a quicker way to get funds compared to typical stock offerings. On the other hand, if the company's stock price struggles or falls, these notes can lead to a substantial dilution of ownership for existing shareholders when they're converted into stock. It is like taking out a loan that could, under certain circumstances, turn into giving away a bigger chunk of your company for less than you might have hoped. We're not seeing specific financial performance numbers in this particular filing, which is a bit of a missed opportunity for investors wanting a full picture. However, the nature of these funding agreements points to a company that might be early stage or facing cash flow challenges, relying on these convertible instruments to keep the lights on and the research going. The risk here is clear. The more these notes convert, the more the value of existing shares could be spread thinner amongst more shareholders. It is a strategy that can work if the company's stock price eventually soars, making the conversion price a bargain for the lenders and a manageable dilution for others, but if the stock falters, it becomes a more painful dilution. Alright, that is our breakdown of Sigyn Therapeutics Incorporated's latest filing. What is your take on these convertible note deals and what they signal for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate filings. And don't forget to check out the Discord in the description for more discussions and insights. Thanks for watching, and see you next time.